oil prices near a 6-month high, the energy sector has outperformed in 2026, but can it accelerate further? This is Sectors Up Close, and we're talking energy. The price of crude oil is hovering around its highest since July last year as the US and Iran prepare for more talks on Iran's nuclear program, while President Trump has assembled a huge military presence in the Middle East. The threat of an attack that could disrupt supplies has pushed up the price of oil, and with it the shares of energy companies. The S&P energy sector is up over 20% this year, way ahead of the wider market. Well, John Stoltzfus is Chief Market Strategist at Oppenheimer Investment Management. John, this was unexpected. Why has the energy sector outperformed by so much this year?
Well, I would have to say what we think is happening here is simply it's traders pricing in the ultimate future position in terms of price of oil rising should the U.S. have another attack on Iran, and what would that mean for shipments of oil out of that region. What we've got to say, though, is that, oil was beginning to do better last year. It was the ninth best performing sector. So it was certainly down the lower end. I think it was up about 5%. I'm just looking at my screen here. And indeed, it was up 4.96% last year. But if we look at it this year, since the start of this year, it's the best performing sector. And it's up, are you ready for this, 21.96% versus the S&P up 0.94%. So it really tells you that something's happening in energy, perhaps even outside of the risks geopolitically. Maybe that there's a sense that the world is coming back in terms of a global normalization in terms of growth.
What do these higher prices then mean for US oil companies? Are they considering investments in extraction they otherwise would not have, for example?
Well, I most certainly think that it has seen some increase in extraction, some commitments on longer-term projects outside of the U.S. But I would say at the same time, I think that's one of the reasons that the price gets some support here. It's most certainly not in any kind of complacency towards the risks to the fact that technology today makes energy much more accessible. And we have, in a sense, we are still on a global basis pretty much awash in oil. And that, of course, can affect oil prices. But perhaps where we are now still has a bit further to rise in terms of the price of oil. And also, these companies are becoming more efficient at deriving profits from their product.
Does that make it more financially sustainable to drill in the US? President Trump famously promised to drill, baby, drill, but at a time when US companies weren't really drilling because they weren't making enough returns. Is that now changing?
Well, I think it certainly has been up to now. It will be interesting to see how we go forward after we saw the Supreme Court's rejection of the tariffs, and also his support rate among the voters has dropped significantly. But we've got to think that since Trump began his second term as president, the oil companies have most certainly felt that they have an ally in the White House. And as a pro-business administration overall, irregardless of some of the drama that happens around it, it just looks good for the energy companies.
Globally, though, there are still fears that the market is oversupplied. Can the energy sector maintain this outperformance?
Well, that's a good question. And, we've seen the energy sector move up slightly in terms of the market weight within the S&P 500, but it still is nothing pronounced. So we would say in some senses what we're seeing in the price of equities within the energy sector, some of it may be expectations of global increase in economic growth. Some of it may be related to geopolitical issues. Some of it may be related to the longer term reliance on oil. But ultimately, it's supply that counts and the delivery of it. So I think near term, we've got to get further through this Iran situation and realize what's going to happen. And then I think we'll get greater clarity in terms of what it means for price. So I would not be piling into energy stocks though we most certainly had some representation in portfolios that I manage that have been marvelously rewarded. So we're pleased about those positions, but we certainly are not going gangbusters in terms of overweighting the energy sector at this point is not what we're looking for.
That was John Stoltzfus of Oppenheimer Investment Management. Don't forget, you can watch more videos on Reuters.com.